Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, August 30th, 2016. Well, let's take a look at the S&P 500 today, virtually erasing all of yesterday's gains. You can see we're just off the lows of the day here. When we were at the lows of the day, we were essentially even if you take yesterday and today into account. So yesterday we went up, today we went down. Because of the bounce, we're up just a little bit net of the 2 days, but not by much. The volume today is ridiculously light, but again, that's kind of to be expected because you have the jobs number on Friday that everyone's just going to sit back for, and also it's a 3-day weekend. So people are already taking off for vacation. A lot of traders are going away with their families. Kids are going back to school. People want to get that one final weekend in to relax with their families before things get back to normal. So again, expect light volume this week. Markets again generally will be flattish in my opinion. I think again once volume returns to this market, the likely direction, especially based on what we're seeing lately, should be down. And you might say, well, why down? Well, I mean, just imagine yesterday and today, right? So 2 light volume days. Yesterday, the upside was gained in one candle, and then we floated up and we floated down the rest of the day. Today, you erased that. All right, so in my opinion, when you erase a previous day move, it's never a good sign, especially on light volume. In light volume, the market should always float neutral to up. I mean, it's just the nature of the beast, as I've said many times over. When people are depressed, when people are sad, what do? They prescribe you medication. So in using that analogy, generally the public is expected to be positive, therefore they generally will buy stocks. If that's not happening, there's a problem. All right, there's an underlying fundamental issue with the market. So again, to see the markets essentially erase yesterday's gain on this holiday light volume week, very unusual. Now, a couple things that I'm keeping note of. Gold today is seeing some sharp downside action. Take a look down at Buck today. It is into a little bit of support. Let's go to the daily chart right now and take a look. I want to show you this, guy. So you take this pivot high and you just put a trend line right across, and you can clearly see pivot, 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 and pivot. Now, I actually expect this to break further to the downside. I do think you might have a pause day tomorrow, but at some point, either tomorrow or the next day, I think you break to the downside on gold, and I think the next wave of selling is going to be very sharp. I think GLD is heading back to 120 target. All right, once it gets to 120, it becomes very attractive for a buying opportunity, but in the very least, I think it's going to go there first before finding a major traction and a major bounce. In respect to gold falling, obviously the miners are collapsing. Take a look at this drop on the GDX. I've been calling for the drop on the GDX since we were back at these highs. It was a very clear rounded top here. You saw this pivot high much higher than this pivot high, but notice how little it broke to the upside right here, and I believe you put in a little bit of a tail there on that candle right here, a little bit of a doji, and you couldn't take it out over here. So again, you had sharply higher highs over here, high, higher high, higher high, and then all of a sudden it started to flatten out. That means buyers are stalling out. There are not enough buyers there. Instead, the sellers are coming on board, and it's not able to push to a sharply higher high. In this case, just a slightly higher high, and then right here, it wasn't even able to make a new high. Dead on sell signal. We came down here. Then you got inside bar consolidation off of a drop below the 50. Again, think about this. This was your support, the 50 MA. Once this broke, the chart got 1, 2, 3 sideways days, which is known as an in spirit of bearish flag pattern, which dictates, again, the name is bearish, therefore it should go lower. And this is pure technical analysis 101. Very, very simple. Downside target for me is right here. You have a gap fill at around 2250, give or take. And then you also have the 200 moving average, which will slowly creep up towards that level in the next week or two. Okay, so again, my analysis is telling me further downside is likely, although don't get me wrong, you're going to have a bounce day here and there, just like always. But generally, the trend will continue lower until at least around 22.5 on the GDX. And by the way, that's a pretty good move. Think about this. We're at 25.80 right now to 22.5. I mean, you're talking almost 15%, right around 15% downside on the GDX. That's a lot still to go. Now, I do think that the GDX becomes a strong buy once it gets there. Absolutely strong buy once it gets there. But again, going to have to be patient. Going to have to be patient. Another chart in action today is Apple, down about $1. The beauty of this, and let me just erase these old trend lines from way, way long ago. But the beauty of Apple is that this was a chart that we shorted in the Research Center. And again, the Research Center is the an area where I give out my live swing trade alerts, time-stamped. We give out daily videos of action and so forth. And the beauty of Apple was that it hit my target for a short right here. All right, and this is exactly where we shorted. So see this gap right here? See how price on this particular day filled the gap, touching that level? It was also the 110 even number level. And again, if you know the methodology here, the PVT methodology, which is what we use, it's proprietary in nature. We teach it to our members. You know that 110 is a psychological level that you can utilize, especially if it coincides with a major technical level like such as a gap fill. In addition, Apple was very extended here. You had a sharp move, pullback, sharp move right to that level. So we shorted it just a hair above 110, and we're still riding it. Right now up over $4 on the trade, about 4%, which for Apple in a couple weeks is a very good move. I think it's going to go lower. I think the target, you have to think the target is right here. See the two moving averages and this gap window and this little pivot high? So if you take this, really this right here, okay, and then this right here, I think you're going to go right in the middle of this area, and that's your target, which happens to be about $100, a little over 100, but right around that even number of 100. So I mean, we're looking at a potential 10%, trade on Apple, which I mean for a couple of weeks is a tremendous reward. That is an awesome reward, and it was all based on firm technical analysis. I think that's the most exciting thing about it, is that it's all about looking at the charts, reading the charts correctly, putting them into play, and making money off of them. So having said that, guys, I'm going to finish up here. Come join us at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. There's options alerts, too. If you like options, we do options as well. Come join us. Take care. I will talk to you soon.